Hello friends. In this video, we'll review quarter 3 results for TCS. If we talk about revenue, then revenue went down by 0.4% to 63,973, whereas estimates were 64,749 crores. So we could see that there has been a slight miss in terms of revenue. If we talk about EBIT, then it is up by 1% to 15,657 versus 15,465 last quarter, and Bloomberg estimate was 15,986. So again, there has been a slight miss in EBIT. Uh, Talking about margins, then margin is at 24.5 against 24.1 last quarter. Uh, so margin has gone up a bit, and net profit rose 4% to 12,444 against an estimate of 12,537. So in revenue and profit, we could see that there has been a slight miss, and somewhere street was anticipating it, and that's why stock price went down. It went down by 1.72, wherein PSE went down by 0.68%. Uh, if we talk about company's market cap, it's 14 lakh crore, so it's a very big company, uh, and has a P of 30. So company has a PE which is lower than other growing companies in this sector like KPIT, Persistent. Major reason is because of its size. At a base of around 14 lakh crores, it is very challenging for company to show even growth in mid double digit or even low double digit, and that is the reason why street has given it a P of around 30. Company does have a good ROE and ROC numbers, since company does not have to do a huge capex. ROE and ROC numbers are pretty high. So as dividend yield, company has a dividend yield of 1.34%. It is observed that in case of IT and FMCG especially, dividend yield is high compared to other stocks like in banking sector. Uh, if we talk about a company's relative valuation, then company stock is trading at a P which is near its long-term average of 31.2. We can see that there has been a constant increase in its growth, but growth numbers are not very high. Company did trade at a very large PE during 2020-2021 after the COVID boom, but since then valuations have sort of came down across the sector. And Like we see here, the growth number for this company for last 5 years, sales CAGR growth is 10% and profit CAGR growth is 8%. So as we already discussed, we cannot expect very high growth from this company, though it is consistent, but we need to taper down our expectations. If we talk about technicals, then company's current stock price of around 4,000, it's near its support. So company did take resistance at this level earlier, and now it is acting as a support. It is also taking support near its increasing trend line. In the past, it did take support and stock price have gone up. Since there has been a slight miss in terms of its quarterly numbers, we can expect it to come down to at least this increasing trend line. If it breaks down, then level of around 3,600, is again an important level to watch out for. And then after that, 3,500 is an important level to watch out for. If company's guidance is good, then we can expect stock to bounce back. And 4,500 is an important level in that case. So, friends, this was the overall analysis of the stock and quarterly results. Broadly, the result is a miss, and we can expect its impact on its stock price. Remember, friends, this analysis is only for the educational purpose. Kindly do not consider it as a buy or sell recommendation. Kindly do your own due diligence before planning to invest in any stock. Thank you.